Hey, good morning. This is my morning update. I want to talk today about cryptos. Very interesting because after Monday's collapse, that China then was beginning to look at the cost of mining cryptos and therefore wants to put a restriction on them due to the electricity needs and other considerations. Cryptos took a hammering on Monday. So what you're looking at is a product that is not regulated, so there's no regulation on crypto in the world. However, it's very, very popular. It's become very popular with most people are looking for excitement, they're looking for a volatile market, and they're looking for potential returns per day or per week in the high percentages. And this type of product has been missing in the market for many, many, many years. The volatility of cryptos has replaced the trading in indices, and also to a degree it replaced the trading in FX. So you've got a lot of FX traders that are used to the volatility previously that are now moved from FX or have diluted their FX trading and moved over to cryptos because of the volatility. However, going forward, no one knows where those cryptos are going to be simply because there's no government regulation on them. And many, many, many banks around the world are either putting blocks on traders who trade cryptos or have any association with crypto simply because a crypto is open to exploitation by criminals, drug dealers, terrorists. There's no name associated with it. It can be passed around from place to place. And what's interesting is that it's probably the number one tool to break all money laundering rules, and yet it's still used and accepted globally as a product for transfer of money. So I'm not sure how long that will go on because of the anonymity, excuse me that word, I had to get that right again, anonymity of the actual transaction makes it the most attractive vehicle in the world to transfer money. It's the mining part from China could only be a tool or a way of saying we're not interested in it, so they've said the mining, but there'll be more countries that come out that will restrict cryptos, so the volatility will actually increase. You can hedge against cryptos, so you can take a hedge. There are companies that do allow you to hedge. There's plenty of them in the marketplace. One of them is Scandinavian Markets. They've got a good hedging facility on cryptos, and they are, I know for a fact, they're expanding their product range. And you've got another couple of traders or companies that globally you could look to hedge against. If you want to take a hedge, go long and short on cryptos. You won't get much leverage on cryptos, maybe 1 to 2. You might get a bit more than 1 to 2, but it's unlikely. And also due to the volatility, if you get more than 1 to 2, you could end up losing all of your deposit and all of your funds on account, because they could wipe out and ask for a margin call very, very quickly, and you might not be able to fund your account. So cryptos is a tricky one. You keep an eye out on that. As regards other more stable but less volatile but more stable would be if you want to go for FX trading or you want to do indices trading. They're also quite volatile, and that gives you far less than cryptos, but that will give you a bit of exposure to some excitement in the market if you're looking for excitement in the market. All right, that's it for today, or this week on that particular topic. That's quite a long video, so I'll stick it on YouTube. What I'm going to do is I'm going to make some other videos and probably put them on Instagram, which will be 30 seconds or a minute, and I've been told by our marketing guys that's more appropriate than putting 30-second or 1-minute market updates on YouTube. So I'll be using different media going forward, or additional media going forward. Have a good day and good luck in your trading. All the best.